Across the board, it is looking more weak than, positive for the Asian market.
Prime Minister said, and I quote, India has also been advancing the interests of the developing world.
Vegetable price inflation would not last more than 2.5 months.
On the Bank Nifty, we are still looking for a decisive close above the 40-day exponential moving average.
Last 10 years, small cap has given 21% CAGR.
For now, the first tick on the index is very quiet, absolutely flat.
There are valid concerns around India's output of cereals, of rice and wheat.
They've set the price band between $47 to $51.
Global cues are largely muted. Markets are absolutely flat.
Issue is open from today till the 8th of September. Price band is 695 to 734.
We remain optimistic about what this will ultimately sort of result in.
The crude oil prices are trading at a 10-month highs now and trading at $90 a barrel.
Nifty is at the day's low, closer to the day's low, 67 points lower there.
Well, that was the day so far. You're with us here on the fresh new edition of Closing Bell. Last hour of trade coming up this Wednesday afternoon. We're coming to you from the CNBC TV 18 Moti Rosewal studios. Rima Surabhi with me. I'm Prashant. And Nigel is joining us from the newsroom floor as well. Guys, hi, good afternoon. And I think we can all sit back a little bit. And the breathless move is taking a bit of a break, a one-day break maybe. That's it. So, the uptrend, I don't want to use the say the uptrend is off or anything. It's just that we're not trending up today. So just a bit of a pause is what we have. So support for the Nifty, just to get dive straight into some levels, which we put out in the morning as well, comes in at about 19,430. And I would say that, and I was making this point earlier, this morning it was looking, given the fact that the market done so well and then oil where it was and yields and dollar, etc., better to kind of stay out, or if you had a compulsive urge to do anything, go in small and not take large positions or anything. But that's kind of daily sort of call, day on day. So around 19,430, which is even a little lower from where we are right now, perhaps risk reward gets a little better. Bank Nifty is down a little bit more. I mean, the Nifty is down a quarter, Bank Nifty is down almost 0.5% or so. There, we're already below supports. 44,400, 44,300, nothing but the lows of the last 2 days. Keeping 44,300, let's actually, the better thing to do is to just see if we hold that level or is there another round coming on the way down. Mid caps and small caps also, and actually that is the real surprise, right? Because we've had days when the Nifty has not done anything, and we've seen the mid cap and maybe the small caps even more up 0.5%, 1%. But today that's not the case. We're flat to slightly sideways on that part of the market as well. Rima.
Well, the small cap index has red going for itself for the first time after 8 days of gains. The Nifty per se has been holding on to 19,500. The fall started somewhere around noon, a little prior to that, but it hasn't breached that 19,500 mark, and this is despite the seemingly negative news. Brent crude prices close to $90 per barrel. The dollar index has almost surged to 105. European markets are firmly in the red. The CAC down about 0.85%. The FTSE lower by nearly 1%, and even the DAX down nearly 0.5%. It's HDFC Bank which is fighting for the bulls. HDFC Bank is now up 1%. So at a time when the Nifty banking index is gliding to the low point of the day, HDFC Bank is holding firm, and that's providing support for the Nifty above levels of 19,500. Nifty Metals, Nifty IT, these are the two indices which are coming in for some amount of profit booking. In fact, the IT index is also seeing some correction profit booking after 6 days of gains. And just to highlight, one pocket of weakness today has been the railway stocks. These were the stocks which outperformed year to date. Most of these stocks have doubled, tripled. But today, you are seeing across the board weakness in these railway related names.
Rima, you mentioned HDFC Bank fighting on the upside. The problem is every other bank is, fighting on the downside, and that's what's playing out. Look at the others, ICICI, SBI, Kotak, Indices, all the other large blue chip banking names are negative. So, the move on HDFC is not really helping the bulls case too much. To add to that, as Rima mentioned, IT is weak, Reliance is not providing support. So, kind of muddling along with more pressure now building in. There is a bit of a defensive play to the market, which is why you're seeing a lot of the pharma stocks, some FMCG names, they're on the upside of the screen. So if I talk about some of those movers on the upside, Divis, for instance, then from the consumer space, Tata Consumer, Britannia, these are names which are positive. Apollo Hospitals, Cipla. So basically healthcare, pharma, FMCG, that's where the green is. Otherwise, it's a slightly subdued screen. Midcap index is flattened out as well. Of course, you have individual movers and shakers. Today, for instance, suddenly there's a huge flare in fertilizer stocks. Whether you look at something like a FACT or an RCF, NFL, a lot of the fertilizer stocks are up anywhere between 5% to 15%, depending on which one you're picking up. So that's one active part of the mid-cap and small-cap market. Otherwise, it is a day of caution there. Those are the moves on fertilizers today. Lots of green there. Nigel, hi, what are you tracking?
Just watch a couple of stocks. Apollo Hospitals has moved to the high point of the day, so that one should come on your radar. And I think we're seeing a bit of an up move on Tata Consumer as well. There's some source-based information that's come on Reuters that apparently Tata Consumer could be in talks to buy at least 51% stake in Haldiram. So that could be one of the reasons. But Mangalam is checking with the management and he'll come back to us with some details on that front. But that's the news that we're getting on the wire. So just keep an eye out on that stock. So both those two doing pretty well. And a couple of other notable movers in the last minutes. I think Bajaj Finance as well has spiked up to the high point of the day. But the big mover for the next 50 minutes is going to be the Nifty Bank. It's underperforming yet again. The good point, though, it's 120 points off the low point of the day. It plays out weekly expiry, and that's why we're going to be looking at the Nifty Bank in particular, because that's been a relative underperformer. We'll highlight that news in terms of the Tata Consumer news that is being reported by Reuters in just a bit. For the time being, let's find out how do you approach trade in the final hour of trade. Mitesh Thakkar joins us to tell us exactly that. Hi, Mitesh. What's your view? I mean, that's sort of a day, a bit of sideways day, but if you bought at the low point, well, you'll be making some money. Your take?
It's bounced back from the lower levels, Nigel, but I think the overall structure, is getting worried only because of the bank Nifty. So my worry is only on the bank Nifty. The Nifty still looks good to me. We have had about 3-4 days of rally, and the pullback was not something which was very unexpected. Though I think this, as long as we are not breaking 19,430 levels, I think pullbacks or some kind of intraday dips would be bought into, and therefore till that level is violated, I think we maintain a positive stance and a target of 19,680-700. So in that sense, we are avoiding the banks, but yes, we are trading with more of long bias. Right now, though, I have one buy and one sell call. Ramco Cement is something which after 2 days of correction is offering a good entry point. So that's a buy. I'll keep a stop below 896 and a target of around 950 can be looked at. And PFC, after a long time, there is some kind of signals of profit booking happening over here. So it could possibly decline to about levels of 246, 245, and that's the sell with a stop at 262.5.
Mitesh, thank you very much for those calls. Market expert Prakash Diwan is with us on the show. Prakash, rumor mills are buzzing that possibly Tata Consumer could be eyeing Haldiram's. Now, if they do manage to get that stake in Haldiram, it gives them a great presence, a great brand name in the consumer segment, a segment which has been missing so far for Tata Consumer. The question, of course, is on valuation and if this deal is indeed going to go through. But if it does, hypothetically, as a Tata Consumer shareholder, how would you feel?
So, good afternoon, Riman. So, absolutely. I mean, it's something which is a paradigm shift for a company like Tata Consumer. They've done remarkably well in terms of creating depth in the product mix and the distribution breadth. But a blockbuster brand like Haldiram coming into their ownership can be very different. I mean, can have such huge opportunities. But having said that, there is this whole interest in ethnic snacks that's kind of spreading across the board. You had the other day, you had some private equity, or not private equity, but pipe funds who bought into Bikaji. I mean, there was a secondary sale there. And, it's quite remarkable to see that even at these valuations, there is interest from long-term investors to get into it. So what it's telling you is that this space is something which has just started getting discovered and re-rated, or the price discovery is just kind of beginning to happen. Of course, Haldiram has raised money in the past from private equity investors when they expanded in the US market. That's when they needed capital. It's been a while now. But even at that point in time, I remember the valuations were quite rich. So it's a very promising segment, but let's wait for the details. As you rightly said, there's no point guesstimating, what is going to happen and what value. All of it depends on at what price they buy in and whether it's actually control as can get attributed from that 51% that we are listening. But I would definitely wait for more details. but Tata Consumer continues to be a great stock in any case. It's a super franchise. There's nothing that they've done wrong, and they just keep on improving with every acquisition, with every new launch. It just gets stronger.
Okay, that's Tata Consumer. It's really flying away right now, almost 2% higher. The news also is coming at a time when the stock overall over the year hasn't done too much. It's been a very range-bound stock. While the rest of the market has run away, this is one that's just pretty much spent the last 12 months consolidating. And the company, I think, right now is saying that they don't want to comment. They're just saying we will not comment on speculation. That's the comment I think that Mangalam's managed to get from them.
There are two Haldirams, right? One is Haldiram Delhi, which is based out of Delhi. I mean, same family, which is called Haldiram Snacks. And then there is Haldiram Nagpur. I mean, if you get out of the airport here, you see that Haldiram, but that's the Nagpur, that's a branch here. That's called Haldiram Foods. We had done a story back into late 2022 where we kind of put out that there was a process underway for them to be merged. And at that point, they were considering an IPO some 18 months out.
So different factions of the same family?
The same family, but the process was on to merge them. But this was back in 2022. Things could have changed. So just putting it out there. And I have the numbers here in FY22. I mean, we don't have the 23 numbers, or if we have, we'll check. The 22 revenues for Haldiram, combined entity, both foods and snacks, was 9,000 crores. And EBITDA of 1,500 crores. These are the combined numbers as of FY22. But Mangalam is standing by with just a quick look at what this could mean and, just a little bit more on this developing story. Mangalam.
Well, the news that we're getting from agencies is that Tata Consumer is looking to buy 51% stake in Haldirams. The valuation that Reuters is reporting is close to around $10 billion. But just to put things into perspective, $10 billion is what Tata Consumer's own market cap is as well right now, close to around 80,000 odd crores. So that is something that we'll have to watch out for, whether it's palatable or not. As of now, the street is excited with the prospect of another business coming into Tata Consumer's fold, a business that it can scale up. The last few acquisitions that we've seen in Tata Consumer, Soulful, etc., they've seen a bit of a scale up, but there have also been a lot of acquisitions that haven't gone through with Tata Consumer, that is the likes of Bisleri, etc. What we need to know, however, is that Haldirams, which does revenues of just about $1 billion, how does Tata Consumer plan to scale it up? If at all that happens. The second thing is, how do they plan to fund it? Because they do have cash of around 2,000 plus crores on their books. But any more than that, given the valuations that the report has been citing, would have to be raised via debt. So will the street like that or not is the question. And the third thing, was pointed out earlier, Haldiram itself has a bunch of factions. There is Haldiram's Delhi, there is Haldiram's Nagpur, and there was one in Calcutta as well. But now the families have come together, and perhaps there has been an agreement which has been reached within the families of Haldirams. So the question is whether this deal goes through or not. But most importantly, we reached out to Tata Consumer, and they did say that they do not want to comment on market speculation. Haven't denied, but haven't agreed either. Let's see where this goes. At $10 billion, however, the street may not like it, and it may be a bit of an expensive snack.
$1 billion, that's a massive number. We know snacks is big business in this country, Mangalam. But yeah, $10 billion, if I may say, maybe that's a number that's slightly hard to digest. But like Prashant said, it's a developing story. So let's wait and watch.
N. Chandrasekharan, the Tata Sons, the chairman, he had said in the Tata Consumer Products AGM, which was held earlier this year, the Tata Consumer has an aspiration to be a full-fledged FMCG company. They are focusing a lot on R&D, looking at categories, acquisitions as well, because they want to be a full-fledged FMCG company. Those were his words that he had used, and I guess this is one thing that they're eyeing to enable that. But let's see whether it can go through. For now, let's move on and talk about Syrma SGS. That's another stock on our radar, higher by 4%. The company has completed the acquisition of Johari Digital Healthcare. Surbhi is joining in with the details. Surbhi.
Thanks so much for that. So they had announced this acquisition back in August the 1st, that they are going to acquire 51% stake in Johari Digital Healthcare for 230 crores and an additional consideration of 28 odd crores to be paid after they have achieved certain predetermined milestones. Now, what has happened is, as of yesterday, they've completed the 51% stake, and management had joined us, after the acquisition was earlier announced, and they had said that Johari has 15 to 18 products which are approved by the FDA. The company itself has an EBITDA margin of 30%, and the Johari business will add 5 to 7% to their top line in FY24 itself. and the healthcare segment will be more margin accretive when compared to the other consumer segment that they are in. So Street is probably liking that. Nuvama has also written on this, and they said that Johari acquisition will lead to higher share of ODM for Sirma SGS. ODM is original design manufacturing, and that has higher margins. So the current ODM revenue is 160 crores, but with acquisitions like these, it can scale up to 400 to 500 crores in the next 3 years. Nuvama is valuing the company at 35 times FY27 PE. They are estimating a 40% compounded revenue growth in the next 5 fiscals, along with a 25% plus ROCE.
Okay, all right. Thanks a lot for that, Surbhi, for joining and filling us in with those details. Prakash, what do you make of the stock? Sirma, I recall talking to the management, and as Surbhi said, this is margin accretive. It bumps up the revenues as well by around 5 to around 7%. And brokerages are factoring in a big growth runway for them. How do you view the stock from here?
So absolutely. I mean, it kind of checks all the boxes at this valuation. The acquisition is very positive, and it also, importantly helps Sirma get into a business or a space which otherwise would have taken fairly long to kind of establish and go up the learning curve. Now, this gets them accelerated entry into a space which they can very well use their manufacturing capabilities to focus on and start growing that niche. But, my worry is more with Sirma's valuations, the P multiple that the market is already awarding to it, according to it. The reason being, in the last 6 months, if you notice, or maybe even closer, the last 90 days, Nigel, what has happened is the market is so desperately or keenly looking for, newer themes that some of these companies that got listed in the last 6-8 months have suddenly found favor with investors because it's new. There's not much of a history in terms of what P bands you would want to kind of put these companies into. And everybody is just kind of chasing some of these new names or a few names in certain segments, because the broader segments, the cyclicals are not something which are giving you very exciting opportunities. So anything new is kind of getting lapped up. The valuations are very stretched is personal view. And I could be wrong. The only thing that probably protects it today is that nobody is yet willing to sell or get out of this space, and that's exactly why it's sustained. But it makes it very vulnerable in terms of the stretch on the PE multiples that the market is awarding right now.
Okay, that is Sirma, and it is, of course, in focus. Stocks cooled off from the high of the day, but nonetheless, it's been quite the mover since its recent listing, which is not too long back. Sirma up 5%. From this one, the electronics manufacturing space, let's move to the next sector that's in focus, and that is sugar. Stocks have been moving higher as sugar prices here, domestic prices in India, have risen to a 6-year high. Big move coming in over there. And of course, there's this global deficit that continues to make headlines as well. Manisha is here with more details. Manisha, so what's the trade telling you right now, and what can we expect? Will these prices remain elevated?
Well, looks like that, and we've seen the sugar prices, as you said, trading at around 6-year highs in the Indian markets. It has been a 3% of a jump up in the last 2 weeks itself, and we're trading at around above 37 rupees per kg there. Also, it is a concern about the India weather conditions. Maharashtra and Karnataka, which are the two major producing states, have seen lower rains, and there are concerns of lower yields, and that has led to ISMA reducing the Indian output estimates down by 3.5% to around 31.7 million tons. Also, when you look at the export picture, I mean, that has been in debate as well. We did export 6 million tons last year, and this year there are concerns that the export could be much lesser, or it could be a halt after 7 years of constant exports, and that already is building up as a deficit in the international markets there. There are various reports suggesting, especially from International Sugar Organization, US Department of Agriculture, and the latest one comes in from a big sugar global trader, Albion, which says that 5.4 million tons of a global deficit is what you could be working with in 2023-24. So the global prices have been on a rise as well. You have the white sugar prices trading at 4.5-month highs, the London sugar prices at a 12-year highs as well. And it's not just about India. Brazil also, because of the rising crude prices, rising ethanol prices, could be diverting more towards ethanol rather than sugar, is also supporting sugar prices. And there are other countries like Thailand, Indonesia, which are also staring at a lower sugar crop this time around. So everywhere that you look, there is lesser sugar, more demand expectations, and that could be supportive for prices going forward.
Manisha, but just a quick sort of, if international sugar prices go up, are local sugar prices going up to that degree?
No, they
Or
are not.
will they be allowed to? So then, in that sense, what's the excitement about as far as sugar stocks are concerned?
So, well, if the exports do not open, that would mean that you wouldn't really be able to make use of the international prices, even with the kind of gains that we have seen, Prashant. When you compare the Indian prices and the international prices, we are nearly 35% lower than where the international white sugar prices are trading at. So, yes, India is in a very high discount right now. But the fact being that the allocation of the quota for the mills for this month and next month is expected to be on the higher side. The demand is higher as well. When you look at a month-on-month, rather year-on-year growth in sense of Indian consumption, that is expected to gain up as well. So 27.5 to 28 million tons is India's consumption itself. We have to divert to ethanol. There's a buffer stock that the government also wants to keep. So those numbers look very tight right now. And that in turn also about the sentiment in the international markets is an added reason for rejoicing.
Okay, well, it's all sugary, right? Manisha, thanks. Thanks very much, Manisha, for that. Well, Prakash is with us. Prakash, the big rally in sugar stocks which has happened, right, is at least for the last couple of years has not been because of sugar. The story has been ethanol. Actually, the excitement has been that, well, they're not just a single commodity company now. They can do something with, something. They can make ethanol and they can sell ethanol, which is a growing market. The government is mandating higher blending, etc. But this sugar story and what I said, right? There's a deep discount. It's a highly controlled commodity. Inflation is high. Very unlikely that the government will allow prices to go up in any meaningful manner. Your thoughts?
So you actually said it, and I'm happy that you pointed out the fact that if there's such a big delta or differential between global and Indian prices. What is it that could happen to Indian prices? Given the fact that we are staring at a festive season, we are staring at an election year, I don't think the government will not allow more expansion of the export quotas and make it slightly much more liberal for Indian companies to be able to sell outside. And that may be not something which will impact the domestic consumption-driven pricing that we are worried about. Now, let me also tell you that the monsoon is something which can have such a big impact in terms of the final output, and once September ends, the crushing season starts, we'll start getting the statistics which will actually tell you why even Indian prices could probably be tending towards being more firm. But the ethanol story is something which the government can very easily calibrate, right? Even if they cannot do much more the global prices. So that's where they're going to use as a lever. And I can tell you the sugar production itself, Prashant, and I've analyzed a few companies in Karnataka and Maharashtra, and most of them actually run into losses given the huge H&T handling cost, during the harvesting season. So it's a bit of a tough business, but the best placed company to play this entire upcycle on sugar is Praj Industries. I mean, you have a company which is available today. Even today, it's available at less than 10,000 crores with such proven capabilities. It's one of the market leaders. It's got pricing power back. And I was noticing in the last 12 months, what's changed is not only has the sales become much stronger, it's something where very clearly they've started getting margins back. And that happens when you have expansion on so many things. And the biggest trigger for Praj, which we've not probably discussed very often, Prashant, is the compressed gas business that could come their way is significant. And the government has focused. In fact, Mr. Mukesh Ambani mentioned about that in his AGM speech as well. So that's a new area that's coming up. So you have another optionality attached to what you're getting at the 525 mark today. It's close to its 52-week highs, of course, like everything else. But I would believe the best way to play the sugar cycle would be buying into something like this.
All right, Prakash, quickly before we let you go, what about Dalmia Bharat? That's a stock that you have liked from much lower levels. If I'm not mistaken, I think it's close to have doubled as well from the time you liked it. Today it's pretty strong from the cement pack. Exposure to East India, that's going to help them in terms of pricing. Input costs are lower, and they've cleaned up their balance sheet as well. Your view?
Oh, absolutely. I think the couple of moves in the last 3-4 months on the capital structure reset has really been very positive. And this enables them to grow organically as well as inorganically if opportunities arise. And I think there's a huge opportunity that's building up. And you know the sector so well, Nigel, that between the 2 and 5 million ton, there are lots of sugar units. A lot of them are not listed, so we really don't talk about that. But there could be a wave of consolidation which stronger balance sheets like of the likes of Dalmia could benefit, apart from the fact that they're growing organically so well at such efficient rates. So, it's the efficiency of how you run a cement business. Because at the end of the day, it's a commodity conversion. So it's going to be something where you don't have much room except for becoming much more efficient at every stage of the process. And that's what some of these companies are doing. And I think finally pricing is coming back in certain pockets. It's not happened as expected in the South, which has probably been a bummer. But otherwise, I think the rest of the markets, the pricing is seemingly coming back. And I would be surprised if most of these companies start getting slightly better valued from here on.
Okay, all right. Prakash, thanks a lot for joining in and giving us your view on a couple of these cement companies. By the way, before we slip into the short break, pull up the intraday chart of Adani Enterprises. There are smaller trades that have taken place, but a huge number of them just in the last 3 to 4 minutes. So Adani Enterprises, a lot of block deals is what we've seen out there. So that's one stock that you should keep an eye out on. I don't know what's going on with Vodafone as well as Industars. Both of them, well, they're surging. Last 30 minutes belong to them. The intraday chart of both of them, Industars as well as Vodafone Idea. Put it simply, if Vodafone Idea survives, then it's great news for Industars as well. And there are some outstanding payments. So both of them are moving up. Industars in particular, pull up the intraday chart out there. For the time being, we'll slip in a short break. On the other side, we have Rajesh Kothari who will be waiting for us. He'll give us his view on the markets and stocks and sectors he likes.
Every time they see me and like, what do you do? Or I work for Colgate. They'll be like, oh, I grew up with Colgate. I use Colgate. I love Colgate. And that's really the power of this brand.
Nearly every household in the country has a toothpaste and a toothbrush. Why is it that they are not using it?
You could do my job, Mangla.
I would love to.
Growth is absolutely our number one mantra, and competitive growth is our mantra.
3 things that cricket has taught you about management.
It's never about one player. I think secondly, winning is fun. You got to keep honing your skills and get better and better every day. That is my uncle there on the cover.
Oh, that's your uncle? Who's
yes,
that?
Venkat Raghavan.
Wow, I didn't know that.
Exactly.
Welcome back. The Nifty is holding above 19,500. It's just a very mild downtake. In fact, in the last 30 minutes, we've seen some buying emerge in the Nifty and the Sensex. The midcap index has managed to get back into the green. Rajesh Kothari, Managing Director at Alf Accurate Advisors, is with us on the show. Rajesh, afternoon, and thanks so much for joining in. Your portfolio predominantly has a lot of small caps. I think majority of your holding is in small caps. Are you a bit worried about this relentless one-way turbocharged rally that we've seen? Are we getting into uncomfortable zones now?
Well, I think, we have two main of our portfolios, and I think you are talking about, so what is our, of course, multi-cap portfolio? In AAA India Opportunity PMS, which is a multi-cap, we have a 58% large cap, and the balance is mid-cap and small cap. I think you are referring to probably AAA Budding Beast, which is a predominantly mid and small cap offering. The good part of this product is a little bit different product. Actually, if you look at the portfolio, we do not buy any small company. So let me tell you how we look at the companies. We look at the companies based by the profit size rather than market cap. So typically the small companies, the micro companies, which are making 10, 12, 15, 20, 30, 40 crores kind of a profit, we actually avoid them in our portfolio. So predominantly, all our portfolio company, be it a mid cap or be it a small cap, they all are market leaders. Most of them are oligopolies. They are monopolies. Most of them would have zero debt on the balance sheet, or they would have low leverage, debt equity less than 1 time. And most of would have 20% plus, return on business capital employed. That's kind of a company's characteristics, what we buy. Now, coming to your question, undoubtedly, the micro cap part of the market has actually moved up significantly. The mid cap and small cap has not yet moved up that fast compared to the micro cap, where there is a lot of momentum investing which is happening by particularly, if I may use the word, retail investors, or maybe it's a speculative interest. And clearly one needs to be careful before one invests into such kind of companies where probably there is a lack of fundamentals, lack of strength of balance sheet, a lack of right management and right governance. But otherwise, we are not too much worried right now in terms of the overall market valuations. Valuations are still comfortable. We are trading at about 10 years average valuations. It is not significant premium compared to what it used to be in last 10 years. And also, one important thing which I would like to highlight is the return on capital employed on the overall small cap companies, not micro cap. I'm talking about small companies, good companies, but small cap. They've actually improved a lot in last 10 years. And that's why there is a lot of, interest in this kind of companies, be it a mid cap or small cap, for the right fundamental reasons. So don't worry too much about timing the market. If one has a 3 to 4 to 5 years view, surely this will continue to pay off in the medium to long term.
Rajesh, hi, good afternoon. Good to have you on the show. So you tell us, you own stocks pretty much across the spectrum. Now, there are certain spaces like, mid-size or small-size defense companies where stocks have literally gone through the roof. Even this electronics manufacturing space, absolutely hyperactive pockets of the market. So within mid-caps and small caps, have you been sort of part booking profits in any segment of your portfolio? Is there any area where you would advise to lighten up a little bit? And conversely, if you would do that, then where would you move the money? Where do you still see a decent value, at least, in mid-caps?
I think, Shubhi, you have hit the nail. What is most important is just not focus on what to buy, but equally focus on when to sell. And the discipline exit strategy is something very, very important for us to keep generating that alpha for our investors. If you look at last 2.5, 3 years, we have generated decent alpha compared to benchmark indices. So what we look at is that when we look at any company in terms of the earnings growth prospect, like if, for example, if you remember 2 years back, from last 4 years almost, we have been very bullish on specialty chemical space. But about 3 months back, most of the specialty chemical stocks, we have exited our portfolio. Correct? So that's everyday review. How do you see the business growth? How do you see the valuations? And keep changing your portfolio depending upon growth, underlying ROC, and underlying valuation. So one space where we have exited about 3 months back, not last day exit, I'm saying about probably January to March quarter, where we exited most of the specialty chemicals companies. And we moved that more little bit into consumer, we moved more into auto ancillaries. And these are the two themes, if you ask me, in terms of mid and small cap space, even today at these valuations where we are seeing a lot of comfort. The auto ancillary pack, we expect it to do extremely well because of the EV thing, which is a new thing which is coming in. The content per vehicle is going to be significantly higher than what we are seeing in last 3 years. And that will lead to significantly better growth opportunity for many auto ancillary names. So for example, we added one of the name, last month, and this company which is supplying, say for example, 30 rupees component per vehicle. Now the opportunity is going to be 300 rupees per vehicle. So it's going to be almost like 10 times. That's the size of opportunity I'm talking about. And as the more aesthetics, more electrification of the vehicles, more sensors, more safety features, and so on and so forth, that leads to a completely new dimension to the growth. And therefore, I think this space will continue to do well. So that's one theme, one sector, if you ask me, where we are adding to our weightage.
All right. Hi, Rajesh. Just coming back to you in a bit. By the way, guys, just pull up the intraday chart of the Nifty. It's up close to 100 points from the low point of the day. And there's a big move that we're seeing. Tata Consumer Products was doing well on hopes that they close out that Haldiram deal. So that's one should come up for you. Bajaj Finserv has done pretty well. And I think HUL and ITC, both of them larger weightages in there. Both of them, in fact, have moved up. And now we're in the green. So this buy on dips just continues. Rajesh, one of the big winners for you all is this Safari Industries. It has a decent amount of one of your portfolios. My question to you is, one of the reasons that they've done well is because of what they have done, but also the largest player in there, that's VIP Industries, hasn't done well, and they have been really lagging. Now, the street expects some kind of corporate event out there. What if VIP comes back, in a big way? Do you think then, in fact, the Safari industry, the way they're growing, you'll see some bit of a slowdown, and that could be a risk? How do you view the sector on the whole?
Well, Nigel, I think what is important is when we look at any sector, typically we identify the sector where there are only few organized players. Like, for example, luggage industry. There are only 3 organized players. You have a Samsonite, you have a VIP, and you have a Safari. Of course, Samsonite being MNC is unlisted. So basically 3 players market. An unorganized sector is huge. It's a huge unorganized sector. So the size of opportunity is big, be it for number 1 player or be it for number 2 player. And within that, if you look at the China, the imports were a major problem in last 3 years. And even today, if you look at it from the duties perspective and unattractiveness of the China versus the domestic market, definitely it favors the organized players more compared to the unorganized players. Another important thing which is happening within luggage is the preference for hard, compared to the soft luggage. And if you want to buy the hard luggage, then it requires a significant amount of capital expenditure, which is not possible for any mom and pop store to do it, because 70 crore line you need to put a new machining line. Now that's absolutely not possible for small companies or small players, unorganized players. So that again benefits the organized players. Within organized players, of course, name what we own have done extremely well in terms of the product launches, in terms of the product offerings, in terms of extending the product offering from the mass segment to coming to the kind of, I would say, premium segment, not yet into the luxury segment. And that's basically from where the growth is coming for Safari. Please put a disclaimer because we own this thing for our portfolio clients. And I think the story continues to remain very solid. If this kind of a growth, this kind of a product offering, the innovation, one of the probably the first one to launch so many new styles, so many new SKUs within the luggage. So in fact, as I say in Hindi, the bag bolta hai, So when you go to airport, you don't speak. Your luggage also speaks about you, correct? And that's where basically Safari is now positioning to the millennials, to the youth. And I think that's what is customers liking about it, and that's why rightly they are gaining the market share. We continue to remain positive on this theme. I think they are doing a brilliant job, be it market share, be it revenue, be it margins, be it capital allocation, be it the new product launches, be it on-road intelligence in terms of the dealers and distribution network. So we continue to own this name and we remain positive.
A big scope of penetration, big unorganized market as well. So these 3 large players will continue to get bigger. Thanks so much for joining in, Rajesh. And as you mentioned a couple of times, your portfolio has been outperforming what the index has been doing. So kudos to you and good for your investors as well. But it's that part of the day where we get an insight into what's going on into dealing room. Nimesh joins us to tell us exactly that. Nimesh, on D-Street Chatter, what are you picking up this time around?
Well,
buy on dips has played out yet again.
I'm not too sure on buy on dips, but given the fact that there were so many weak global cues, still we've done better. Yes. That speaks for the kind of momentum which is there for the markets. And even in today's trade, the broader markets are relatively outperforming. That's where the action seems to be. So the theme of mid cap, small cap, they're doing good continues. From a broader market point of view, again for the last many days, the feedback is 19,550 seems to be acting as a very strong resistance on the upside. If that gets taken out swiftly, then you'll see a big rally, in the days and months to come. So that's the overall feedback. In terms of flows, again a mixed day of trade. The volumes are on the higher side, so there is larger participation, unlike yesterday, despite not much blocks happening. So the volumes are definitely going to be higher in today's trade. I guess from a sector point of view, a bit of profit booking for second day running in the metal names. But I guess pharma, there are a couple of IT names that continue to bid well, and that's where the action seems to be. So net, despite weak global cues, we are faring better, and the momentum in broader markets continue.
Well, Nimesh, as we speak, 19,610. That's the kind of recovery that we have seen. And the Nifty Bank, we made this point earlier today, that the Nifty Bank is off form. But in the last 60 minutes, it could make that move. And it's up 200 points from the day's low. So that's the one that's underperforming, but at least recovered some of its losses. Individual stocks, though, that's where the game is at, right?
A lot of action, Nigel. A lot of stocks, a lot of blocks are happening, and a lot of blocks are expected to happen as well. So the first stock on my list today is JM Financial. After a block of nearly 1.5% equity changing hands, a big move in that stock. It's up 6% as well. And I believe in terms of the buyer, I guess domestic mutual fund was a buyer in today's block deal. So the disclosures could be interesting as far as JM Financial is concerned. The second stock is Dreamflux. Even in there, the stock has moved higher after a large block deal. I think there was a clean out trade, nearly 2.5% equity got changed hands. And I believe in terms of a seller, a large long only fund was a seller in today's block. So likely a clean out trade from that particular entity, and some domestic mutual funds were buyer there as well. So that's second one. The third stock is RHI Magnesita. Now this is going to be interesting. The stock is consolidating off late, has moved up, but again, there the indication is there could be a large block coming soon in this particular stock, and maybe the strategic investor is going to be a likely seller in this particular company. So that's something to try going forward. And the last one is Voltam Transformers. Big mover in the mid cap and small cap space. It's been a huge wealth creator as well. But now I'm told there could be a very large block deal in Voltam Transformers as well. Just a word on this particular company. If you look at the shareholding pattern, the promoter owns 50%, the mutual funds own 25%, and the FI is on close to 13%. So the float is very less, just 13, 14%. But here there is an expectation of a very large block deal coming very soon.
Okay, thank you very much for that. Another stock is Jio Financial Services, which you should be tracking. Interesting price action. The last 30 minutes will be crucial. Nigel will be telling us a little bit more about it, but the stock has seen some recovery in the last few minutes. Get into a break. On the other side, we'll tell you what you can buy today to sell tomorrow. Calls from our technical experts. Stay tuned.
Welcome back. You're with us on Closing Bell, and the markets managed to find some green once again, 19,619. So it's been a very interesting and a very, very sharp and swift recovery. Just want to quickly highlight some of the constituents have led that up move. On the way up, look at something like an Infosys, some of these IT stocks that were really under pressure. They're trying to cut their losses. There's, of course, been gain on the consumer side. We've been talking about that. So Titan, for instance, is up and about. And some of the names like, of course, HDFC Bank is a big one, but ITC is the other major consumer player where we've seen a huge flare happen. In fact, ITC is up about 1% thereabout. So big move on the market as we are seeing things. Mitesh is back with us. Mitesh, very interesting and very sharp moves on a couple of these consumer stocks ever since that Haldiram news came in. What do you make of it, and what's the advice now?
I think clearly there is some strong breakout on the charts of Tata Consumer, and in fact that is my BTST call. In the last few years it's been moving up, but I think it still should see momentum in the coming days. So BTST here with a stop at 874, targets of 890. And I think once it crosses 890, 892 zones, then I think the stock can even go towards 920. So it will also become a position call. And the other one is another buzzing stock, that's Sugar. EID Parry has managed to get past the 200 average. So that's not a BTST exactly, it's a short-term buy. Keep a stop below 510, look for targets of 545.
Okay, got that. Thanks very much, Mitesh, for those trades. Very interesting moves in consumer stocks. After that news, the Reuters news report pointed out that maybe there's a deal brewing between Tata Consumer and the Haldiram Group. Massive moves across the sector. Well, Mangalam's back with us. This time he's not looking at food or consumer stocks, but he's actually looking at InSwift Labs. Why is that, Mangalam?
Well, you know, it's interesting what has happened with InSwift Labs. This afternoon itself, there was a deal announcement that came in on the exchanges where the company has said that they will sell their API and CRAMS business to Synthimed Labs Private Limited for about 1,650 crores in terms of enterprise value. But this is not a comment on the nature of the business. It's just a comment on the way these deals have been announced. Why do I say that? Well, because 1,650 crore is the enterprise value. The company has said that the debt on their books is close to around 800 odd crores. So the equity valuation that they've given to this deal is close to 850 crores. The market cap of InSwift Labs after this 20% up move is close to around 730 crores. So one would say, yes, this is a deal which has happened to at a premium to the market price. So maybe it is a positive. However, here's the catch. The business that they are selling accounts for nearly 96% of their overall turnover. So the API and CRAMS business is nearly their entire business. So what the company has basically done is sold their entire business on a slump sale basis. Street would have liked, the entire business to have been sold, and as a result of which there would have been an exit opportunity for minority shareholders as well by virtue of an open offer, etc. But that hasn't happened. So the next logical question is, what does a company do with 96% of its business gone and nearly 800 crore cash coming on its books? You would assume that they would give it to shareholders, but no, they're not doing that. Instead, the board has also approved grant of unsecured loan of up to 600 crores to InSwift Limited, which is another group company. So that's interesting. And going forward, the InSwift Labs and InSwift Limited companies will be merged itself. So I went ahead and looked at what InSwift Labs is doing. InSwift Limited is doing. InSwift Limited board has approved the increase in borrowing limits of the company at any given point to be outstanding from 1,500 crores to 2,000 crores. The market cap of InSwift Limited is just 120 crores. So all of this was a little curious. So I thought I'll just put this out.
Absolutely, and you rightly called it a curious case of InSwift Labs. I don't know, I'm just thinking out loud, Mangalam. I mean, they've sold off 96% of their business. They've got a huge chunk of cash. They're parking a lot of this cash into another group entity. The stock is still up 20%. Could that be because the market's just being optimistic? They're hoping maybe ultimately they'll delist, and therefore in delisting, there could be some sort of an interesting price that shareholders can get. I'm just, wild assumption. I'm just trying to think why the stock would react the way it is right now.
But there won't be any delisting or anything of that sort. What we know is that InSwift Labs, the 4% of the remaining business, will actually eventually be merged into InSwift Limited, the entity to which they've been giving, or they'll give this 600 crore worth unsecured loan. So all of this just, is extremely curiosity-inducing, and at the same time, not particularly favorable for minority shareholders, largely because they would have liked the business to be sold, with its in its entirety, with the option of an open offer.
Okay, thanks a lot for that, Mangalam. Well, let's focus on Jio Financial Services. The reason we're looking at it is because it's going to be excluded from the Nifty and various other NSE indices effective tomorrow. So, the reason that it's got excluded finally is because the stock didn't hit the circuit on both the days. That's on Monday as well as Tuesday. And we know from Monday onwards, the circuit limit had moved up from around 5%, it moved to around 20%. It's a spun-off division of Reliance Industries. That's the financial services division. And in fact, it started trading on 21st of August. So for the last many days, from the 20th of July, in fact, we have had 51 stocks in the Nifty. Now that gets back to 50 tomorrow. Why are we tracking it particularly for the last 30 minutes? Because passive funds, they'll be looking to sell shares. And going by a rough rebalance that Novoma put out, the rough number could be around 10.5 crore shares. And, that's why, in fact, if you look at the intraday chart, just look at the intraday chart, it appears most of that supply has got absorbed. So that's one stock that we are focusing on. Mayuresh Joshi as well joins us on the show. Mayuresh, what are you making of Jio Financial Services? Listed at around 265 odd. The sheet is playing on the promoter pedigree out here and, the penetration scope as well. Your view on the stock, even that passive fund selling that's happening is getting eaten up at around that 250 odd rupee mark. Your take?
Afternoon, Nigel. Absolutely, point well taken. And the supply is being absorbed very easily by the markets. And therefore, I think the entire presumptions that the street is working on in terms of Jio Financials being extremely well capitalized at this juncture. The second element in terms of the ready-made database that it probably has at its behest. And obviously the technological support in terms of the digital platform offerings that it will operate out of. Add to that, I think the senior management team, which is probably expected to come in, and experienced bankers who are already there on the board of Reliance Industries, I think that affects the expected performance to a large extent. So I think you compare Jio Financial with any NBFC which was starting off, even with a strong parentage, it did take them quite a few quarters to probably stabilize their business. But with the expectations of BlackRock coming in, a clear understanding of getting into both the life and non-life part of the business, and through digital offerings, the low-hanging fruit in terms of consumer durable loans, as an example, through the retail, Reliance retail presence. I think all of this adds up in terms of a faster AUM accumulation as they begin their business in real earnest. And therefore, as numbers start rolling out over the next few quarters, the street is probably leaning, it can be relatively better. When it comes to valuations, Nigel, I think sky-high valuations at this juncture, without the business even picking up quite significantly, and a lot of expectations being built in. And therefore, I think fresh investors should definitely hold on in terms of a better price. If that comes or not, I think patience is something that might be a key virtue.
Mayuresh, afternoon. Thoughts on PVR Inox? The stock has practically been re-rated since the beginning of Q2. When we started Q2, July, the stock price was sub 1400 and now it's at 1800 plus. So it's seen a rally of 30%. Now, Q2 is going to be a blockbuster quarter for the company, just given by, the slew of releases which have done well, whether it's Barbie, Oppenheimer, Mission Impossible, Rocky and Rani. I think every movie has done pretty well and crossed well at the box office. And now, over the weekend, we've got Jawan releasing. Is all of it priced in with the stock price at current levels?
Afternoon, Rima. So I think to a large extent, the kind of content which has come through, and you rightly pointed out all the blockbusters that you probably mentioned and the advanced bookings for Jawan as well. The footfalls expected to be significantly better, specifically in the second and third quarter, because as festivities come through, I think there are a lot of more blockbusters which are probably expected to come through, whether it's Bollywood or it's Hollywood. So to that extent, the expectations in terms of good footfalls coming through and average selling price with occupancies going higher is definitely going to play very positively for PVR Inox. I would like to see, Rima, on one hand, the ASP prices and ticket prices staying extremely steady, but they've probably just slashed down their F&B prices, and F&B is the highest gross margin contributor to exhibition players, including the likes of PVR Inox. So how much of an offsetting effect does that have in terms of numbers when you put numbers through for Q2, Q3 is something to be watched out for. But purely going by the sentiments and the momentum that the stock is going with all these underlying tailwinds, the momentum can very well continue well into the second and third quarter as we speak for this match.
Okay, got that. Mayuresh, stay on. We'll have some more questions for you. Need to take a quick break. We'll come back with more market talk in just a bit.
Welcome back. Just take a look at the screen, looking as beautiful as ever. The Nifty up close to around 55 points. When you got up today, if you saw Brent, if you saw the dollar index and you saw the US yields, you would say it's going to be a bit of a wobbly day. But that's the kind of market texture. The buy on dips is working. And just take a look at the index. We're up 50 points. The Nifty Bank on the verge of moving into the green. Mayuresh Joshi is still with us. Mayuresh, I want to ask you about this one. Vodafone Idea, one of the stocks that have been buzzing in the last 1 hour. Vodafone Idea and Industries. Any view out there? Would you take a gamble in there? Hope that they can raise some money and play it via Vodafone, or hope that Vodafone survives and then, in fact, play it via Industries?
I wouldn't gamble, Nigel. More fundamental in nature.
But you look to buy it.
No, having said that, I think if Vodafone is able to raise capital, obviously I think Industar, where I think the tendency is relatively higher from both Vodafone as well as Bharti, might see its tendency ratios stabilize. And therefore the expectations in terms of more stable operations coming for Industar might be a more tactical bet to be probably taken. But not direct coverage of both these stocks.
Okay, well, we're going to start wrapping down things. I just want to quickly, Mayuresh, thank you very much for joining us. Good speaking with you and appreciate it very much as always. Take a look at the kind of stocks, by the way, which are are doing well, which in the broader space, right? And I'm not kind of saying this one way or the other, but so it's a mix of sugar. So a long list of sugar stocks, and let's pull these up. Renuka, big mover. Dhampur, big mover. Uttam Sugar, Dalmia, Mavana, Ugar Sugar. I can go on with this list. Awadh Sugar, Dwarikesh. So you got about 12, 14 sugar stocks all rallied. If you can have these up, please. There you go. I think we've got one. Uttam. Let's have the others also. There's Mavana, there's Renuka, there's Dwarikesh, Dhampur, etc. Then you come to the fertilizer stocks. Fact. Names like RCF, Madras Fertilizers. So there is sugar, there is fertilizer, which did very well in the broader markets. And then you get to paper. So JK Paper, Andhra Paper, Tamil Nadu Paper, Orient Paper. These are the names which participated. And then there is rice. Dawat, KRBL are some of the names which participated. So it's a curious mix, right? I mean, and these are sectors where it's never one stock. It's these spaces are small in size if you consider the total listed market cap of each of these sort of sectors together, and they move together. So sugar, some of these rice stocks, fertilizer, paper. That's basically what did the best in the broader market. And I looked at the top 40 odd movers, volume-led movers, and these were these four sectors. You also had some EMS companies which did well, which we highlighted, of course. We highlighted Sirma, but the other one was Avalon, which was a big mover. So yesterday we had highlighted that note from Jefferies, which talked about that I think they were initiating coverage in that sector. So Sirma, Avalon, etc. participating very well. Rail stocks on the other side, though. I mean, we've been highlighting the move in these names. So IRFC, RVNL, and IRCON. Actually, there's Titagar and Texmaco as well. All were down between 2 and 5 to 6% in trade today. So, yeah, I mean, the broader market, all did also recover, like the Nifty and the Bank Nifty. But just take a look at and be watchful of the kind of stuff which moved today. Rima.
Well, at the index level, it's a solid comeback. The Nifty low today was 19,491. Which means below 19,500, and we're going to be ending above 19,600. So it's a good 100-point plus recovery from the day's low, and most of it took place in the last 1 hour. The pockets of strength, one is consumer, FMCG. So Tata Consumer is the top Nifty gainer as rumors resurface about the company looking to buy stake in Haldiram's, a majority stake of 51%. The stock ends with a gain of about 4.5%, very large volumes. But other consumer names like Britannia, Titan, ITC are seeing some very smart up move. Pharma has had a very good session. There was a defensive tilt in the markets from the beginning of trade, but Torrent Pharma was the top gainer. Nomura they raised the target price to 2,199. They believe if they go through with the acquisition of Cipla, it will be a strategic fit. Divis Laboratories, Cipla, Lupin gaining in trade. Other notable movers include Bharti Airtel, so it wasn't just Vodafone Idea and Indus Stars. The entire telecom basket saw some buying, and HDFC Bank was one of those lone banks standing in the green, while the rest of the pack struggled, at least the large cap names like Axis Bank, IndusInd Bank, ICICI Bank. These three banks ended in the red, while HDFC Bank stood pretty tall, and some correction in Tata Steel, Hindalco after the rally that we had earlier in the week. The bell has gone, and the Nifty has ended above 19,600. A solid comeback and closing in the green for the fourth consecutive session now for the Nifty and the Sensex. The midcap, small caps recovered, but largely ending flat. Well, with that, it's a wrap and closing bell from the entire team. Thank you for watching. Don't go anywhere. A special offering, CNBC TV 18 Weekender, comes up next.